Another day of strong rallies, and it was especially strong in the airlines, the travel stocks, the cruise lines, some of the banks. You could see this rally in very many areas of the market, but it was particularly strong in the areas that have been most hit. We aren't really seeing it in big tech. We're not really seeing it in healthcare anymore. We're not seeing it in the stay-at-home plays like Zoom Video, not even Upwork, which is kind of a stay-at-home play, but only got the rally once Jim Cramer gave it the heads up. So to me, it feels like we're really approaching the end of what should be the rally. Does that mean it's going to not continue? No. The rate of change is going to decrease significantly, I believe. I think there are two possibilities, and I think the more likely of the possibility is that the rally just continues in the long term. And I believe that because two things. We've got President Trump as president, but more importantly, there's been a lot of inflation. There's been a lot of printing of money. There's been a lot of money in the hands of the people. And when inflation occurs and the value of the dollar goes down and price level goes up, price to earnings multiples in the long run will also go up. And that's ultimately what determines stock values. Are the companies earning enough? Are they making enough money to justify the valuation? Now, right now, the price to earning multiples are really bad. It's like 2000, 2001 bubble level. I've heard a bunch of people say that they haven't seen this kind of valuation since the bubble. And if there is no inflation, and that is the case, this is a really bad position to be in. But what will justify the rally is two things. One, the strong economic recovery, which we believe is happening and we'll discuss next. And two, inflation, because inflation will drive earnings up, will make the math and the nominal earnings and the nominal revenue make sense. And then the stock price will then go up, just based on the numbers and the valuation of the dollar and inflation. Inflation affects the stock market too. Inflation is not just a less valuable dollar. It's an increasing price level. And it looks like there's almost, now I'm not going to say artificially, but a mechanistic increase in stock prices that is taking place in addition to the economic recovery. More cash is going to go into the stock market. There's just going to be more cash overall. And this is classic inflation. Gold typically trades inversely to the stock market, but because there are concerns about inflation, maybe not concerns, I'm not too concerned about inflation, I'm just acknowledging that it's happening, it was rallying the same day the market was rallying. That's relatively rare. So, as for the economic recovery, first we got to get the economic recovery, then we can worry about the inflation, because the inflation we'll see more in late this year and next year and beyond. And the economic recovery we're seeing right now. We're seeing the jobs come back. Again, the concern is the rate of change in the jobs going to continue? We got, 2.5 million jobs in the month of May, positive 2.5 million. Are we going to get another positive 2.5 in June? Is it going to be 1.5 or is it going to be 3 million? I don't know. I honestly have no idea about that. I expect it to continue close to the same rate. New York is barely open. 400,000 people are going back to work today, so that's a lot. And most importantly, the rate of people filing for unemployment is going down. My next kind of catalytic month is June. It's July. I think June, we're continuing this rally, but I think we have to flatten out. I don't think we can be hitting new all-time highs consistently. You can see right now the NASDAQ is lagging, and I do believe that there should be a market-wide pullback. As soon as these laggards, lose their momentum, it's really dumb, to me. The airlines and the cruise lines are moving the entire market, which is, in my opinion, not a good idea, but everyone's seeing those numbers come out early in the morning, and they're like, oh, I got to get in the market now. I got to get in the market now. Everyone, the most hated stocks are now rallying, so I got to get in the market now. Those companies, the airlines and the cruise lines, those stocks should not reach the prior valuations that they had before this crash. Airlines are fundamentally a worse business because there's less business travel, which is essentially their biggest, most frequent, most consistent customer. Those clients are going to Zoom. Then you add the fact that they took on so much debt, gave a lot of stock to the government who's going to have to sell it at some point, and the valuation should just not be the same. But they're on a beeline to that level. So will they get there? I doubt it. I think the market will act rationally before then. But there's so many different forces going on right now. There's a massive rush from cash into the market. There's this trade in airlines and cruise lines that is justified because the economy is reopening. Those stocks may have been hit too hard, but they're not going to reach their prior valuations, or they might. I don't know where they're going to reach, but they shouldn't. They're not as valuable companies. Cruise lines took a ton of debt too. So, and they have barely grown in the last 5 years as stocks, by the way. So there's a lot of weird things going on in the market right now. I hope I'm painting this picture in a clear way for you. The most important things, though, it's not the airlines and the cruise lines. This is a couple weeks tops issue. It's the economic recovery, and it's the inflation issue. Inflation is going to cause stocks to go up a lot, like a lot. So we're going to see that in the long run. We're not going to see the effects of inflation in June and July. Some people might be considering that now and are not wanting to be in cash and would rather own Apple stock. But we're going to see it in the price of the iPhone. You know, a $1,200, we thought a $1,000 iPhone was ridiculous. Well, now we're going to get to the $1,200, $1,500 range. You know, obviously we've got the Pro Max and all that, but the starter Pro, you know, and then the minimum iPhone is going to be, they might offer lower quality iPhones, but prices are going to go up, and prices of chicken is going to go up. Everything is going to go up slightly. I believe, I'm a very firm believer that there's inflation, or going to be inflation, and I think the Fed is almost okay with that. You know, they essentially are making money available to whoever wants it. They gave a lot of PPP loans and all of these things. They just were significant, as of today, very end of the day of the market, which gave us that last leg in the last hour, were very generous with their terms. They decided to extend the principal payment from 2 years to 5 years, among many other things. They want to make money available to the people, increase the money supply, which is going to increase inflation. And I think if you adapt, if you buy things like gold and stocks, and you should always have a little bit of cash, but if you invest your money, you're not going to need to worry about that. Your assets are going to change with inflation. But just be wary of that. Just be wary of that as a catalyst to move the market up. In the medium term, I do think valuations are getting a little too hot in some areas of the market. I do think the airlines and the cruise lines are going to have to either calm down or pull back or something. And then everything's going to be at fair value. You know, are we going to start moving up then? Yes, we have this inflation thing, but there has been economic damage and there has been lost earnings. And at this level of earnings, valuations are ridiculous. Now, I'm still a buyer in some areas of the market. I'm a growth and value investor. And when I find growth and value, I buy. The places I'm finding that are few and far between. It used to be I could just throw a dart pretty much anywhere in the market and be okay. Now I got to make sure I'm hitting the target. And I'm hitting the target, but my list is shrinking. So pick your spots. This is a good time for active management, as pretty much always, but especially in a time like this. And just be wary of these inflation things. The market's going to go up, I believe, in the long run. I'm not even discussing hitting the lows again. But there's a lot of weird things going on still, of which I think the biggest concern is airlines and the cruise lines. Those valuations don't make a whole lot of sense to me. Maybe right now they're okay. Right now they're fair. Before they were a little low. Right now they're fair. But they shouldn't. The airlines and the cruise lines just shouldn't be driving the market. So until next time, peace.